You have a business, and by the looks of it, it sounds promising. Maybe a startup or been running for some time that you know what you're actually doing. But you need a way to go. And the first door that you look for is funding, and a lot of it. But where to look? Your traditional banks, investors, or government grants. All these institutions offer something different, but the main goal is funding for your success. So much information is out there on how to apply to get approved. But do we actually know what is expected of the business to be approved? Have we studied the interest of the lenders? As always, this is the versedin channel where we learn to learn. And this is how to properly place your business to be approved for the growth.
Alright guys, we're back with another masterclass. Get approved for a business loan where we unlearn to learn. That is our motto for this channel. So let's get to it. How would be nice to get approved for a business loan, but let's see what's lurking behind the curtains of getting approved for a business loan. Get a loan, or rather get a bank loan, and learn to learn that banks are not there to fund or loan your business idea. It may sound promising to you, but does it make business sense to them? That's the biggest question that you need to ask yourself. The only way to prove that is to show with your business financial statements and projections. And as stated, your 3 months bank statement is not enough. So most regional banks, or rather lenders, they would simply just ask you to provide 6 months bank statement, or rather 3 months bank statement, and rather other requirements. But this is just there to go to. And normally you would get rejected. I know most of us who will be watching this video have been rejected. I myself have been rejected until I learned what I'm actually going to be sharing with you today. So banks are giving loans to you once your business is able to prove that they can make a return, and the loan you are requesting is a need for a return investment value. So you might ask yourself, what is a return investment value? So in simple terms, whatever cash injection is being injected into your business needs to come with a return. So in a form of investment, or rather in a form of interest when you're doing your repayments. So mostly you would see this example with your influencers, where they would invite them, and then they would give them whatever products to advertise. In return, that you and I, who are fans of that influencer, would go and buy whatever products we saw them having. That's how we get influence, rather. And then that is what is called interest, rather return on investment value. Does my business require a loan? That is one of the biggest questions that you need to answer truthfully and honestly, because this journey that you're about to take is a harsh one, especially if you have taken, or rather committed, into a certain agreement for a repayment. So if the first answer is no or maybe, so if your business does not need a loan and can sustain itself with profits rendered by the sales made from selling your product, it is a benefit for you to seek financial assistance to learn how to reinvest in your business and maximize with your business growth. Because the biggest mistake that we do as a business startup and so forth, we start these businesses just to escape poverty, or rather to try and make success of ourselves. But however, we're building it in a very, very influential state, where you simply take those profits and then you start splashing on whatever that you want to splash on. I mean, we've seen this with so many politicians who have been getting tenders and so forth. So should you do this mistake as well, make sure that I'd rather avoid this mistake. Make sure that you teach yourself with financial etiquette, and in turn you can also affiliate yourself with a community of financial graduates. Why I like this point a lot, it's because there's so many graduates who are unemployed and they are good in finance, and they also want to express their skills and to develop their skills also as well. So it's very important to affiliate yourself with those people, as they would try and build a financial ladder for you to try and follow, so that your finances, even though you don't need the loan, but your finances can project and you can rather reinvest in your business. So affiliate yourself with a community of financial graduates. Profits can never be always guaranteed, so learn to sustain your business. It is very, very important. Make sure that you look for those financial graduates, or anyone who has majored rather in finance. They are there, they are unemployed, and we need to build a community around them, because it is a skill sharing for, I mean, rather for them. They benefit from making sure that they are assisting you. That is why in my previous video I did say that it's very futile for you to request lump sum payments while you also don't have any skills. Make sure that you share skills around the community, and then you can build a long sustainable business. And if your question is yes, then your business needs to be in a financial position that can prove it requires the loan and can increase profits to repay the loan. But I understand that there's so many factors that can drive you to wanting to apply for a loan, and it can be to drive sales, increase profits, or rather increase productivity by buying new equipment and so forth, or rather you want to do a financial projection by making sure that you pay salaries even in those harsh times, and you'll have to rather be able to motivate why you do need this loan, and it needs to make sense for the lender. And there are many other factors also that can help the bank or funder gain trust into granting you the financial rescue you need. I'll also cover this in one of the next slides, so simply just stay tuned. Is your business in a position to be funded, or do you know what is expected of your business to be funded? I'll also cover this in one of the next slides, because once you say yes to this question, you are in for a roller coaster, and it can motivate you, it can break you, it can rather make or break you. So make sure that you answer these questions truthfully and honestly before you even go and request that application form. So these are just some of the loan stats that I would like to go over with you, so that you can understand what's happening around you and around this market and around the space that you are in right now, as an entrepreneur, as a hustler, as someone who just started in business. So these loan stats come from the government institutions. We were not able to get stats from the traditional banks, your ABSA, your FNBs, your standard banks, as to at what scope do they do these funds, or rather how many businesses have they given loans to, and how many have failed and so forth. We haven't gotten those stats, but as soon as we do, we'll make sure to share it with you guys as our viewers. So without wasting too much further, there is a great demand for funding in South Africa, according to the SME South Africa Landscape Report, an assessment of South Africa's SME landscape, your challenges, opportunities, risks, and the next step. So the landscape report goes as such. The majority of small business owners surveyed said that they are actively looking for funding. However, the vast majority, at 94%, had not received any kind of funding from government. So guys, 94% is a very big number. That means out of 100, if my math is correct, only 6% were able to get the fund. So 94% were not able to get these grants. It goes to say that strict measures are taken for you to get a certain fund, or rather a certain grant that you're looking for, even for the government sector. So only 6% said that they had received funding of this kind. Of the 6% of business owners who noted that they had received government funding, the largest share pointed towards government grants at 21% as the key funding mechanism used. So business owners indicated that they had received funding from other government structures such as the DTI at 17%, the NYDA at 16%, the CEDA at 15%, and they indicate other government avenues that they have persuaded as well to secure funding, including Umsobomvu Youth Fund and alike. So this goes to show, guys, that it's very strict for you to get approved, even for a grant that you will pay no interest for, or rather that you will not even have to return should your business fail. It's simply just a fund, it's simply just a grant to try and assist upcoming entrepreneurs. But the fail rate is at 94%. That is staggering, and it's a very huge amount. So it shows that the failure rate it's high for you to get funding. But it goes to show that are we failing to get these funds because our business are just not modeled around to get funding, or are we missing certain business etiquettes to try and understand what is actually needed by the funders, or rather the lenders, to secure that loan? As I stated in my previous video, that for you to sell a product, you need to understand the customer. So for us to get a loan, do we understand the lender? Very imperative. And if you're as ambitious as I am, you do know DTI, you do know NYDA, and NYDA is one of the most common and most popular because they do fund startups. But at this failure rate, it is very should I say, it is very demotivating when you try to go and apply for funding after hearing these stats. But stay tuned to the masterclass and let's see how we can work around it. In types of funds, I understand that there's so many videos out there that will try and explain this more properly, and that's why I simply just had to summarize it, because there's so many videos that will cater for this, and there's so many information around the net that will try and cover this. But if you are a first-time viewer, thanks a lot. And if it's your first time understanding of these types of funds, then let us just go through it. So firstly, it's your government grants. Government grants for small businesses are popular with startup businesses owners because unlike bank loans that need to be repaid with interest, grant funding does not need to be repaid. But please take note, even though they don't ask you guys to repay should you get this funding, but it is very important for you to understand that there's certain guidelines that you need to stand by for you to get this fund. For argument's sake, you might need to have a certain percentage standing PE, and you might have to hire a certain ethnicity, certain race group, and so forth. So you need to have certain guidelines, and you must have maybe a certain number of people in your board of directors and so forth. But there's always an element that you need to have in your business for them to grant you this loan, or rather this fund, or rather this grant. And then coming to your traditional banks, your ABSAs, your FNBs and so forth, those are your bank loan financing. A loan is in line with the credit offered in exchange for interest payments on top of the loan repayments. The lender does not take any form of ownership, known as equity, in the business, although some surety is generally required in order for the loan to get approved. So you might ask yourself, what is surety? So in simple terms, it's something that the bank can hold on to for them to grant you this loan. So meaning your financials can look good, everything can be up to par, but man, there is something that is missing, and they normally request surety in instances that your business is less than a year old, or rather it is a year old, they don't have trust, and you've never taken a loan before, and even maybe the director of the business has never even taken a loan before, so they don't have any trust. So in this case, let's say you're looking for a loan for 100,000, they would simply just say, can you place down 10% of the amount that you're asking for? And if you can put 10% of the amount that you're asking for, most definitely rather, you will get the loan. Or rather, if you have any form of property, they will take that as collateral as well, but we'll cover that in the other slide as well. So bring us to the next one, angel investors. So angel investors aren't financially motivated. They are usually friends, family, mentors, or people from your network who believe in your business and in you personally and want to assist you. Many are business owners themselves who are paying it forward by assisting young entrepreneurs get started. This is very important because this is what we stand by in this channel. Build a community of people who are as eager as you, more motivated as you, hungry as you, more like basically make sure that you surround yourself or affiliate yourself with people who have the same motive as you, because those people can act as your board of directors and they can fund your dream, your idea, and even your business, and they can take it to the next level. But I do understand that there's also a website that you can post your business idea in, and they are angel investors. So basically the website is just angel investors, so they're gonna bid on how they can assist you, and they can place funds to try and make sure that you elevate your business. So they will sponsor you with whatever credit that you, or rather with whatever funds you're requesting. So the last one is equity funding. Unlike a business loan, the investor takes an ownership percentage of the business in exchange for funding. There are no monthly repayments or interest repayments. So this one is, if honestly you get equity funding, then it means that you are in the big leagues, because this one simply just means that you're looking for 100,000. Investor comes through and tells you that, okay, fine, I'll give you 100,000 for a share of 10%, depending on whatever credit agreement that you guys might have. So it can be 10% and so forth, and they will be actively invested into the success of the business, because they've put their money on the line, and they will make sure that they make a success of the amount that they've given to you. So depending on the credit agreement, they're going to make sure that they want a controlling share as well, or rather at least a voting share onto your business. So equity funding, if you geared to go to this one, then you must have one goal in mind. So funders checklist. So these are some of the checklists that funders, or rather lenders, are checking. Even the traditional banks are also checking for these things to make sure that they give you the financial rescue that you need. So the first one will be collateral. Collateral is vital for raising finance. For every rent they lend you, you'll have to provide a rent value in assets as security, or a guarantor will have to stand surety for the loan. This means that the guarantor agrees to repay the loan in an event that they are unable to do so. Lenders value your assets at minimal value, unless you have a property that can be easily be sold. So what I'm simply trying to say with this one is, if you have a property as surety, or if you have a property as collateral, then the bank would actually require you to place that so that they can grant you the loan. Because should your business fail and you can't repay their loan, the property is one of the easiest things that they can sell and recoup their amount. So it simply just boils down to this. But however, another way where they can be able to recoup their amount, let's say your business has been active for the past year or 2 years, and you already, let's say you are you're selling, you're in a culinary business, right? culinary arts business, meaning you have certain equipment, your stove, your fridge, and so forth, and then they can attach all those equipment, and then it comes to a certain rent value. So let's say they accumulate to 200,000. If they do accumulate to 200,000, then you it's more like a percentage for them to recoup, and then you can get whatever loan that you've been requesting, and then it gets granted to you. It's as simple as that. And then affordability of the repayment. The forecast must show that the business can afford to repay the finance and be realistic. The National Credit Act has forced lenders to be far more careful about the affordability factor, and as such, you will need to produce detailed financials to prove that your company, excuse me, your your company can repay the loan. In many cases, small businesses are treated as individuals when it comes to the National Credit Act, and therefore therefore you could be asked to provide personal financials as well. Remember, in our past videos, we did state that you are the first employee of the business, and as such, should you need to require, or rather, should you need financial rescue, I did state that you will have to be in good standing with the credit score, because it's very vital in case you need to fund your business, either to buy equipment and so forth. So it's very, very important and very vital that your credit score is in good state rather. And then another factor, let me simply just mention this example. Let's say you are selling your weaves, and then you normally commute to where you're going to buy from your supplier, right? Make sure that you record the amount, or rather the cost of transportation for you to go to the supplier, and the cost of stocking from your supplier. And if you got any discounts, make sure that you record those discounts as well. Because once you record those discounts and then you reinvest it back to your business, it will show the lender that, okay, fine, you know what you're talking about, and we can trust you because you understand all the logistics when it comes to financing. So guys, this is the mistake that we all make. Make sure that you record each and every cent that comes and goes out of the business, because it doesn't help having a business account, but the only thing that they're seeing is 500 has went out, 1,500 has came in, but they don't understand how that amount came through. That is why the business, in a business loan, they would want you to account for that gap. So make sure that you have at least a template, Excel, and so forth. Make sure that you use those methods, or rather those forms, to record each and every finance, rather any financial transaction that can assist your business. Make sure that you record it, because the bank might request it in future. And then lastly, your business risk. So business is risky, but some businesses have calculated risk as the sector and the products or services offered have a proven record in the market. In the business, or rather, is the business viable for the next coming 5 years? Can economic and technology replace the business? And the character of the business plays a huge role. So what simply this slide means is simple as is. Make sure that when you start a business, you understand that the business that you're starting can be viable for the next coming a period of years. What I mean about this is, there's trendy businesses where it's only booming for that certain time frame. So if your business is aligned with that, you will not be able to get funding. So if your business also is easily affected by economic factors like your COVID and so forth, then it's most likely you won't be able to get the funding, even though yes, they've made provisions for those type of events. But make sure that your business also cannot be replaced or entirely replaced by technology. You understand? Because once your business can be replaced by technology, then it is not viable for them to invest in, because someone can just create a program or an AI program that can simply do whatever business that you've been doing for cheap or even for free. So make sure that you align your business. In our previous videos, we did say that you do market research whenever you starting a business, because it's very imperative rather, or rather important for these times, especially when you're going to apply for business loan, or rather business rescue, or rather business funding. And another factor to take is some businesses have a proven track record. For the easiest one is your franchising. If you simply want funding to go and open a McDonald's, they will give you the funding even on your sleep. But if you want funding to go and um, stock your weaves, it's a 50-50 chance. It's a very slim 50-50 chance, because there's so much competition. At whatever price that you are selling it, someone is selling it cheaper, and at that cheaper price, someone is selling it even at a 50% discount. So it is check if your business is at that risk or not, and then you are most guaranteed a, a a bank loan. And I always say that in our previous video, when you're opening a business, make sure that you're solving a problem. Those businesses are most likely to get a business loan, but still, I did say, make sure that your financials are okay. And if it's a startup, make sure that you visit your government grants and so forth. Your proposal must be up to par, so that you can get the grant, especially if you are solving a problem. And then something to take on our last slide, SME loans stats. So the most recent report on SMMEs access to finance indicates that the major reason for small businesses being rejected by banks is that they are not finance ready. This is very important. I did say, guys, affiliate yourself with people who are in finance, so that they can thoroughly explain if your business is ready for finance, because you might feel that you're making profit, but you're actually working at a loss. It's just that you are doing a hand to mouth. You just spent 1,000 rand on stock, you have a profit of maybe 20%, and you just use that 20% to splash on yourself, or rather to even buy groceries and so forth. Because I did say that I do understand that we open businesses to escape poverty, and it is one of the biggest mistakes that we're doing. I understand we are in a bit of a ditch, but make sure that you motivate yourself to not be motivated by poverty to start a business, but start a business because your ambition rather drives you, and the skills that you have they drive as well. And in many cases, this simply means that the businesses were unable to provide the necessary information required by the loan application. The moment a small business is unable, and please take this key, the moment a small business is unable to provide the required information, they are seen as high risk, and the loan will not be granted. So please do take this in, ingest it, and stay tuned for the next video, as we will be explaining further as what is needed for you to have success into the business. Stay tuned to the video, and this is the end of the masterclass.
Now that brings us to the end of the session. Please subscribe, it will help the channel. That's the funding we need, and we'll pay it back with good content. If there's anything we've missed, please comment, as there's room for improvement. Use this information to allow yourself to grow and understand if you need extra funds. It's important to properly place your business and yourself in an honest position before you make the commitment. Should you default, it may be the end of your reputation and the trust of your business. Join us again on the next masterclass, where we still unlearn to learn.